Okay, so this is going to be, what is the date? The 3rd of March, our weekly outlook for the upcoming week and what to expect on both DXY and some foreign currency pairs. We'll only be taking a look at DXY and GU for now. If need be, I'll send some other stuff through. But yeah, so we are on the weekly time frame here, taking a look at DXY. And in all honesty, for this specific pair, I think that we are intermediate term bearish overall. What that means is I would be favoring sells over buys in this market currently, and trying not to be on the opposite side of the order flow. I know it might not look 100% clear. Note that this is a weekly time frame, and we don't necessarily take our trades off of the weekly, but we go to it for direction or daily bias. So what we can see is we have got this defined range, our range high and our range low that we're operating within. We've got a internal liquidity sweep relative to a larger scale range, right? An internal liquidity sweep, and we've got quite a bit of displacement away from that. So I've marked out our range high as a buy side liquidity pool. If it does trade up there, this is resting liquidity, and our range low as a sell side liquidity pool. There is resting liquidity below this low as well as below this low. Now, to note, we've traded into this down close candle, the 50% area of it, since it is a larger down close candle than what we would reasonably expect. This is what I consider ICT's bullish order block. Normally the 50% of said candle should be respected if we are bullish, and we've seen a little bit of displacement to the upside, but nothing that is convincing me that we want to take out this high. I do think that we want to revisit this area. Whether we'll trade through it or not, we'll have to see closer to the time. But focusing on the near term, where we are currently trading, we've got this weekly fair value gap. I've marked out the premium level of that and the discount level of that, and we've traded into it as well as respecting with our candle body closure. What I mean is paying close attention to where the candles which traded into this to where they closed. So this is a bullish candle. It closed inside the fair value gap, but it didn't close above the 50%. If this candle had closed above the 50%, I know the wick is there and the wick trades right through the fair value gap. If the candle had closed above the 50%, I would be expecting this price to actually go up and maybe trade above this high. But I don't think that we are willing to do that per se. So for DXY, I am expecting us to at least come back down and rebalance over here or rebalance within here. We can find support here. I know it's not marked out, but this is an inverted fair value gap. We can find support in here and continue upwards, or we'll trade down here into the lower fair value gap, which is what I'm keeping my eye on and why this one isn't marked. But yeah, moving towards the daily. Chart's going to get complicated in a moment. I want to use these. Okay, moving towards the daily. Focusing specifically, we can take this off, just not to overcomplicate it. Remember now, what you see in here, we are in the weekly fair value gap. Okay, so moving towards the daily, this up close candle that is marked out with this blue line is what I consider to be a daily order block. We've got our range high defined and we've got our range low defined. Resting liquidity is above and below these 2 points. So once we've traded into the fair value gap, the weekly one that is marked out, notice how we have this big up close candle and then we trade through it, right? This here is what I consider as ICT's bearish order block. The candle body closure that we are getting once we have actually closed below this candle and formed a internal low per se. Notice how we're not closing within that candle, right? It's very, very important. Never mind the red blocks that you see on screen. This is part of ICT's market maker sell model that I would be looking at. So this high over here, on the weekly, this is the fair value gap where it begins. This high is an internal, it is an internal range buy side liquidity. That's what we look at it as. It's internal range buy side liquidity, meaning this is internal liquidity that we are running. Internal to what? Relative to this larger scale range that we have. So bearing in mind now that price can only move from two forms of liquidity, from internal to external and external to internal. If we're running internal liquidity, where are we likely to go next? It's very likely that we'd be running external liquidity, but that is a more larger scale picture, which is not necessarily what we're focusing on. We're just focusing on what to expect for this week. So I've marked out a couple of internal lows in here. This one, the middle one, specifically is important to me. We've got this one here currently. This over here would be a very low risk sell, is what I'd be looking at it as. I'm expecting price to come and run each and every single low in here. If we put on the weekly PD arrays again, you can see this is the fair value gap, and this low that we have here is at the 50% of that fair value gap. So price can run all the way down to here. This candle over here, if I turn on these, is marked out blue because it's a daily order block. Price can come all the way down into here as well, but I'm mainly focused on the weekly, the weekly fair value gap, not necessarily the daily. So yeah, turning that off and keeping this on. What I'm expecting for this week is for price to maintain the resistance that it has at this level, at this 104 area, 104.17, 104.2 area. I'm looking for price to maintain the resistance. Once it sweeps this low, I'm expecting a retracement back up into this area, from this high to whatever low it projects over here. Just a small retracement back into it, and then I'm expecting it to sweep this low, and then a small retracement back up into the range that it creates once we do sweep this low. So nothing too crazy. I want to keep our eyes on the near term. We are for this week, we're expecting to run the 103.43 level, and maybe depending on the news drivers that we have coming out, the 102.800 level as well, which is our equilibrium price relative to this range. Now, another thing to note is that everything that's occurring currently is within premium of the range. Okay? Everything that's occurring currently is within premium of the range. I'm not into chart patterns, but if you look at how we run this high over here and then break down below it, as well as the retracement, this is what we would consider a market this is what we would consider a, what is it called, a market structure shift. Yeah, you can tell that I'm not really into the patterns and whatnot, but a market structure shift in simple terms is just a raid on liquidity as well as a change in the stated delivery, or a change in the character of price, right? This would be your raid on liquidity, resting liquidity above this high, and the moment that we close or raid this low, it's an indication that price wants to go lower, right? So something interesting to add on. But anyway, getting back to it, we have the raid on liquidity, we have the displacement lower, we have the closure below it on this candle over here. So that convinces me that this market actually wants to go down. So our outlook for the week for DXY would be bearish. The other one that I wanted to take a look at was GU. Now, GU, I was taking a look at on the weekly. we've got our range high as well as our range low. I've marked out a fair value gap as well as the 50% level of that fair value gap, which is 1.2547, right? That's marked out. I've marked out what I call a change in the state of delivery. You don't need to know what that is currently, but I will explain. I want you to pay specific attention to how we tap into the 50% of this fair value gap. If the market wants us to go higher, okay, this one is for the notes. If the market wants us to go higher, the 50% level of PD arrays, which is fair value gaps, order blocks, mitigation blocks, and breaker blocks, that 50% level there, if we do not close above or below it, if we do not close below it for a bullish market, the market is confirmed bullish. It's very likely that we will be trading higher. If we do not close, I don't know, keep that. Let's just keep it simple, okay? Notice how we don't close below this 50%. This convinces me that the order flow is indeed bullish, and we are looking at a weekly time frame as well. Notice this wick is a lot larger than the body of this candle. It's about 60% of this candle is the wick that wicks down into this down close candle. This down close candle is also the previous week open, right? So we've got our range high and our range low, and then we've got our fib as well. Everything that's occurring here is occurring in discount relative to this range, right? We don't necessarily have a liquidity sweep on this time frame, but I will show you one on the daily. Okay, so going forward to the daily, do I want to keep these open? These on here? Yes. Going forward to the daily, it's pretty simple. All that I'm really paying attention to on the daily is this down close candle here, which is, wait, let me take these weekly PD arrays off. Okay, all that I'm paying attention to on the daily is this down close candle, which is a bullish order block, right? Once we leave the range, we come back. If I mark out 50% of this area, you'll see that we don't even tap into it, right? It comes nowhere close. We're already finding support within these down close candles over here. This down close candle is considered as the daily order block. Inside here is a run on internal liquidity relative to this range. This is the range low, this is the range high. We have external range liquidity resting above and external range liquidity resting below. Like I said on the weekly, everything that is occurring right now is occurring within discount, which is prime time for buys if we are expecting this market to take out the high. This mitigated PD array that I've delineated on the chart, this would be considered as ICT's bearish order block. We do see bearish price action once we tapped into that, but at the same time we see us finding support. Now, with a bearish or with an order block in general, once we've tapped into it once, it shouldn't necessarily come back to it. But this price action to me looks as if we are bullish, which would make sense. I will explain why in a second. So the price action currently on this chart, we're looking at it as bullish. We've got an internal run on liquidity, which is more than enough for me, as well as an order block which formed, as well as the 50% level being respected. Not just that, but even the open being respected on the order block. Now, this is a daily chart, so going forth for this week, I would be expecting this market to be bullish, at least up until we run some sort of internal or external liquidity. I've marked out the previous weekly high as well, which is a form of liquidity. We'll look at this as internal liquidity relative to the weekly chart or relative to the daily chart even, right? We'd look at this as internal liquidity. The reason why I am convinced that this market is necessarily bullish is because DXY is giving us clear indications that it wants to go lower. And intermarket analysis tells me that if this is bearish, then GU has to necessarily be bullish, right? So I don't necessarily do currency pairs on my own, but this is just the outlook that I have for the week. We'll see if it plays out 100%. Though of course it's just like anything else, like any other person that does forex. It's just speculation. But yeah, I hope this was insightful, and I hope that it helped.